You're our second chief investment officer today. Keith, let's take us through, if you will, why you think the market is in a okay place, I'm thinking right now, Keith.
Yeah, hey, Dom, great to be with you. Listen, we're up over 25% for the year. We've had a big run the last few months. Having a little bit of digestion, I think, is perfectly normal. Our main thesis as we move into next year is a bull in a China shop. So we're staying aligned and anchored with that primary trend, which we think is still to the upside. But we also expect to see some disruptions along the way, which should provide investors some tactical opportunities along the way.
Where exactly, then, do we find some of those opportunities right now? Everybody has a different view on this, but I'm curious what you think is going to be the driving force in markets in 2025.
Yeah, well, I think the driving force in 2025 is still going to be the economy, and it's going to be earnings, right? Because valuations obviously are somewhat rich. But as we look big picture, we still have an emphasis on equities relative to fixed income. We're still Team USA, even though on a short-term basis, I think you might see international do a little bit better on a short-term basis, but fundamentals still support the U.S. for the overall year next year. And then we still think this bull market, the dominant theme is AI, and we think that technology has another good year as well.
What exactly are places right now where you are seeing at least a little bit more of this kind of move? Is it going to be in that Mag 7 side of things? Is it going to be in those small caps? What exactly is the view on whether this broadening out trade really has legs in 2025?
Yeah, I think it's more about complementing as opposed to saying, hey, this is only one area. We still like technology. We like Mag 7. We think artificial intelligence has longer to go. But we also think another part of the market that can complement that is mid caps. It's often an overlooked part of the market, an orphaned part of the market. Is trading at about a 25% discount to the S&P. Historically, it's traded close to parity. And some of those pro-growth policies and pickup in M&A should all benefit mid-caps. And they're only up about 15% above the peak from 2021. So we also think there's some catch-up as well.
All right, so that brings us to your word of the day, right? And let's kind of take us through what exactly it is and how that mid-cap story kind of fits into it.
Sure, and I kind of let the cat out of the bag that it is overlooked. And specifically with mid-caps, a lot of times people say, what do you think about large caps? What do you think about small caps? What do you think about international? No one asks about the one in the middle, like the middle child. And in some ways, in our view, again, they're cheap. They're somewhat higher quality than small caps. They're trading at a discount. And over a cycle, they tend to be more stable than small caps. So again, they'll trade somewhat in tandem with small caps, but you get a higher quality version. And I think that we'll see a pickup in M&A, and I think that area specifically will benefit.